The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you have the Dow down 50, Nasdaq's up 5, S&Ps are off 3. And inside the indices here, this is what we have, strength versus weakness. If we stay with the Dow Industrials, what you have, Disney is the strength inside the Dow. Disney's up $1 right now. You get Visa up 64 cents. Intel is up 15, and you get Pfizer up 18. Taken away from it, it's the oil. Oil's the culprit out here inside the Dow Industrials. You have Chevron down 262. ExxonMobil's off at $1.18. Caterpillar's off at $1.04, and Big Blue is down a 174. Inside the NDX 100, what do we have? The strength is Autodesk. That's up $1.57. Big dead cat bounce. Let's see. What is this one? This is interesting. JD. What is this? Okay, so JD.com. Direct. Okay, that's up 78 cents. That's a direct line internet seller in China. Micron Tech is up 38 cents, and you got American Airlines up 73. Taken away from it on the way down, the NDX 100, you have Mattel down 48, Netflix is off 233, and Skyworks is down $1.81. If we go over, let's put that up right there. Okay, so if we go over and we take a look at the S&P, this is what you have happening out here, folks, okay? SPX. There, our cash, well, the S&P, the cash S&P, you can take any one of them you want. A bottom line is that we're the exact same place we were in February. We're 10 points higher than we were last December. You have a slow roll that is happening here, and your correlation inside that slow roll, the most amount of information that we've actually got out of the market and the most consistent information has been in the bond market and the dollar. Bonds out here, if we take a look at the TLT, what you're going to see, this is a 20-year plus. TLT came in with big volume on Friday. We're trading one. Now, this is the ETF structure for the 20-year plus bond. What we're doing is this. We're at 122.72. We did volume on Friday of 9.7 million, taking out the 8.1 million, which is a very large ABC structure on the way up. So your 8 point on this, bring this back so you can see how clear this is. Your 8 point on this is down at the July 13th level, 115.39. Your B is 122, so you get about 6.5 points. Your C point is 120.44. So that's setting up a 127 structure. Now that 127 structure also plays into the last swing points that were out here that are important swing points. Those swing points were generated in March. So bottom line is that bonds want higher price. Most of the time when you see higher price on bonds, what are you getting? Bottom line is that you're getting lower prices on the indices, the S&P, the Dow, the Nasdaq. King Dollar. Let's go take a look at King Dollar. For all the talk about how strong King Dollar is, King Dollar, folks, okay, bottom line hasn't been at a high since last March. That high was 100.47. What we've had is that you came off that high with juice on the way down. We did a counter trend bounce, got up to the 98.31 level, and has not been able to get into that level, number one. And what's so intriguing about the King Dollar deal, I think, is this, is that we've had the Fed meetings. The Feds continue to say that, yes, they're going to go, well, the probability is that they are going to go higher this year. The market itself is saying, guess what? You may be thinking you're going to go higher on the short-term rates, and they very well could, by the way. Okay, so the structure, just so you understand the structure too, that what we're talking about rates versus what's happening in the 10-year and the 30-year, is that we're at 0 to 0.25 basis points, okay, which is a quarter basis point. But that rate, folks, has to do with the Fed lending the 7 largest banks money, so they're they make money hand over fist. It doesn't have to do with what you and I get money for. It's not even close, okay? So most times when they do raise, what you'll see very quickly is the short-term rate rises. The long-term rate, last time this happened dramatically was in 94. The long-term rate didn't basically budge, okay? So this time I'm looking at it and saying to myself, you know what's going to be intriguing here? Even if they go, it looks like the 10-year is not even going to budge, which would just be a total mind blower, because what that would do is that they'd have to go back to their playbook and figure out, okay, where can I push rates and how far do I have to push rates on a short-term basis in order to move that 10-year? Well, we'll see how that shakes out. But bottom line, bonds want higher price, lower yield. Dollar also wants lower price, which is like why? You know, what's so cool about the rest of the currencies out there? There's nothing great about them. But what you do have is that the rates that are overseas, okay, are dramatically lower, meaning our rates are dramatically higher as money is moving around the world. Right now, Italy is lower than we are. Italy is at 1.7 on a 10-year. Let me put this over here so you can see this, because when you set this up, there's a disconnect that's huge. So this morning, real time, we're at 2.1 on a 10-year. France is at 0.9%. Italy is at 1.7. Spain is at 1.9. Portugal's at 2.3. None of that makes any sense, folks, okay? Because the bottom line is that means that our rates are still dramatically higher than the rates across the world. And what does that mean? That means that there's going to be more money chasing our bonds because of the fact that you're going to get paid more for them. Some of the Dow stocks, let's take a look at some of the Dow stocks out here. You have Big Blue is down 151. You get Caterpillar off 77. Oxy's down 82. Walmart is up 12. That's trading at 72.10. You get Amazon flat. The Big Mac is up 7. Let's go take a look at Big Blue and see what's happening with Big Blue up here. Big Blue has been teetering for years now. She looks like she's setting up a ABC structure on the way down. It's going to be interesting to see what happens here. Okay, so Big Blue has come off that high, which is the top of the consolidation. That was July 20th. She's trading at 173. She comes down 13 points. Your B point on this of an ABC structure down is 158.60. Thus far, we've hit 159.38. Now, it's not going to need much volume to make an ABC structure on the way down. You know, all you need there is the 3.7 million at that lower level. We've already done 872,000. You know, so we'll see if she goes after that B point today. But someone on the open out here basically gave it to Big Blue and gave it pretty quickly. Let me just see here. Yeah, so at 10 o'clock, you had someone throw in 41,000 shares and 11,000 shares on a sell. That's a big number for Big Blue, because you're talking a stock. Of course, that's a $162 stock. Big number. No two ways about that. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go to the world of the XLE. XLE, of course, large integrated oil, gas stocks, been on a tear on the way down. What we're doing out here today is that we're breaking a B point, and it's a monster, folks. So the XLE right now is trading at 68.59. We've hit 68.02. 68.21 is the B point of an ABC structure on the way down. We only need volume of 17.1 million. We already have 4.2 million. You know, bottom line, if that closes under the 68.21 and has the volume, you get another leg down in this market. And this leg down here, your A point is on the 14th, which is 74.84. Your B is 68.21. So you probably got approximately 6 points, actually 5.75. You see a 71.50. That's going to be lined up about a 66 inside the XLE. And when you line that baby up, let me pull this back a bit. You line up a 66. Yeah, she's going after, this is going to be intense, man, if she's ever going after this high volume. There's a high volume swing low that was generated out there in October of 2011. You guys, if she's going after that high volume swing low of October 2011, you're talking about $56 because the high of that low is 73. And needless to say, we've already got into the 73 level. So we'll see if she goes after that lower level. If we go to two of the largest weighting structures inside there, ExxonMobil right now is trading out at 78.28. That also is breaking a B point. It looks like it's going to break it with, actually, yeah, it's going to break it with volume. We did, oh, it's going to be close. Okay, so ExxonMobil, thus far, we put this, is done 3.7 million. You're down 90 cents. Your B point on ExxonMobil is 78.97. Now, we've already broke the price point. Put this back a bit. You got Exxon. So if Exxon, you know, we're at 78.39. The top of that bar, of the same bar from 011, is 81. The bottom, 67. Saying we get lower prices coming at us. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back. Dow is down 60. Nasdaq's off 1.5. S&Ps are off 3.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now at 65. You get the Nasdaq off 3. S&Ps are off 5. And this is, let me see if I can, I just got rid of this story. It's just on the not in the top 10. I'll find the story for you. But I just wanted to go over with you folks. You know, the Shanghai market, okay, is no doubt a market that is not only has gone south quickly, but it's not the first time that, you know, this whole thing came out. What's intriguing, I guess, evidently, though, what has happened is that the first get-go in 2006, 2007, when this went higher, not as many individuals were in the market. Because when you look at Shanghai, what we've done is this. You know, the expansion topside in 2006, you know, we went from 1,200 up to 6,000, and then back to 1,200. Well, we started out at 1,200 in May of 06. It gets to 6,000 in October of 07, and it's back to 1,600 in October of 08. Okay, so total round trip. The same thing's happening this time, and in fact, we didn't make a higher high. You know, we started out at the 1,200 area again, 1281 or 2180. We go up to 5178, and bottom line, you know, we'll see how this baby's going to attack the last low that was established out there, but it looks to me like we got a very large ABC structure on the way down. You know, it's going after this 3373 area. The thing that, so that's technically, fundamentally, bottom line is that these equities aren't open, number one, half the market's not open. And the story that just came across the tape is even better. And I'm going to find the story for you, because what the story is about is this, is that the bureaucracy that's actually in charge of the buying of equities in order to stabilize the market in China is run by an academic that, you know, very smart guy, writing-wise, theory-wise. For 25 years, he's been writing basically books about the marketplace. Bottom line, in March, folks, guess what? He was writing that China is in an absolute bull market, great market to invest in. So, you know, you talk about the person who put huge amounts of confidence behind the market for people to get into, is now in charge of trying to keep it up. Bottom line, folks, okay, no academic, well, in fact, it's just no academic. No one can control markets. That's what it comes down to. What they can do once they're flushed out is that, yeah, you can get buying coming back. But until the baby is flushed out, there is no such animal on this earth, okay? Every company, every country has tried to do it over the course of the years. Guess what? When the financial sharks are going at each other and people want their money back, okay, what ends up happening is that the acceleration and the fast moves inside the marketplace take the rails off, and all those sayings that people use, those are real sayings, folks, because what ends up happening, unless particularly bureaucrats. Bureaucrats haven't seen fast markets, don't know what fast markets are, think they can turn around and wait, whether it's an hour, 2 hours, 3 hours. Markets don't wait, folks, okay? And in fact, when you have high volatility in markets, the key is you better know your Fibonacci, because when high volatility comes in markets, I don't know how or why, but the bottom line is that is when these fib numbers shoot left and right, and they just bounce off them like a ping pong ball, okay? And bottom line, what we have done thus far is that a lot of these equities have broken down inside the market, but yet the market's still up. You know, when Dave and I do the show on Friday, I was just listening to his show at 3 o'clock, and there's no doubt, you know, he was talking about, like, how the heck is the market flat when the oil stocks are getting killed? Well, it's evident there's something that's underneath that, you know, that was keeping that up. And it's just like when I started the show today, looking inside the Dow Industrials, looking inside the NASDAQ, bottom line is that the bounces that are out there, folks, are dead cat bounces of stocks that have got killed. You know, if I bring up the leader inside the NDX 100 right now is Autodesk, okay? Well, Autodesk is up $1.53. You're trading at $52. Well, it's been a one-way ride down from 65. Not that that's a lot, but that's all it is, a dead cat bounce. That happens. You have turns happening. This is like a slow turn, but the bond market and the dollar has been picking this up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is down 85. NASDAQ's off 6. S&Ps are off 6.5. We're going to be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 97. The Nasdaq's off 7. S&Ps are off 8.5. And so check this out, because I got the story. This is intriguing, too, what I just learned about this. So here, you know, when I was just bringing you into the aspect of, and I want to bring this up simultaneously, where the market actually was in Shanghai in 2006 and 2007 versus where it was now. This is pretty wild, because what I didn't realize, let's go bring this back up again, because when I read the story to you, it's intriguing in the aspect of what the actual Chinese government actually had done. So when we bring Shanghai up, and the reason I'm doing this, by the way, folks, okay, we're in a one-world market. You know, when Shanghai falls apart like this, people are turning around saying, oh, it doesn't affect the markets. All these markets affect each other. There's legs in them. There's no doubt about that, but they do affect each other. So in Shanghai, what you have is this, okay? In 2006, you know, that's when we went from 1,200 up to the 6,100. The difference is this, though. Check this out. So this is what the story's about. After China's stocks crashed in June, the government put more than $400 billion at the disposal of a little-known state agency, the China Securities Finance Corporation, headed by an academic and bureaucrat named Ni Kuei-ping. He was told to save the market. The agency's unique mandate is to intervene in the market to buy stocks with money borrowed from the central bank and other sources in order to help prop up share prices. Okay. Ni, the 53-year-old chairman, hasn't given interviews on his emergency role, and the government hasn't spelled out exactly what discretion Ni and his agency have when executing orders from above. 4 weeks into the role, the picture emerging from Ni's published books and commentaries, as well as in his interviews with fellow academics, is a professor of 25 years of experience watching stock manias, who still got blindsided by China's latest crisis. The latest rally has characteristics of a structural bull market, Ni wrote in an article in March, joining a chorus of officials and state media commentators talking up the market's prospect. As one of the architects, and now here's the kicker, as one of the architects of China's move to allow margin financing, in which people borrow money to buy stocks, Ni played down concerns that debt-funded stock purchases were rising too quickly. Ni now faces the Herculean task as the head of the agency that never expected to be handled the role of market savior. Okay, so check this out. So he said two different things there. The first one, of course, was that he got blindsided, which you can see people get blindsided all the time. The second one is that he didn't feel it was the margin lending. But inside of this, so check this out. What I didn't know, and this is the kicker. This is the key, how they actually got the market up. the first get-go in Shanghai, folks, in 2006 and 7 that still crashed, didn't have the financing that the second run did. And this is what it is. That same agency only came into existence in 2011. China Securities Finance was set up in 2011 to provide liquidity for the brokers offering margin finance. And okay, so the bottom line is that what you have is that it was set up purposely to finance the broker-dealer community in order to lend more money to all the folks that are trading. Now, that's normal. You know, that's how our broker-dealers, our banks are set up. What's not normal, though, is the amount of leverage inside of that. That's where, I don't know what the actual legal leverage is, but we do know that 10-to-1 leverage is a normal deal in China, and that's why the fast and furious road on the way south, you know, has implications to go down very quickly. Now, we go to Puerto Rico. You go in the bond market, Puerto Rican debt. Bottom line, this is the first time that the government is kind of like Fannie Mae, Freddie Mac. The government did not back up this debt. But bottom line is that by the end of today, the debt actually was due on Saturday. They have a grace period that's happening. That the ramifications of that's going to start hitting some of these municipalities, and that's just you know, we'll see where something comes out of the marketplace that folks are not expecting, because that's how this happens most of the time. Most of the time, it's not the event that has markets go south. It's the derivative event off of that structure that begets more selling. So what happens, someone more than likely has bonds. Those bonds hit. They're going to get a call, margin call. They're going to pull it in. As they pull it in, what ends up happening, they're going to sell something else in order to do it. That's how most of these, excuse me, folks, larger events happen when you're going south. Some of the high volume stocks in this market out here today, and we'll see whether we're going to end up having a high volume market. It's going to be really tough to get a high volume market on a Monday in the summer. So we'll see where that does shake out. But thus far, this is what you have. You have Apple down 37 cents. Tyson Foods getting hit. That's down $4. Micron is up 50 cents. You got Chevron off 272. Coke is down 4. Kinder Morgan is off 52. Marbell's down 32. You know, inside the IBB, that baby, the NASDAQ Biotech Index, still trading flat, 382. And, you know, it looks like it's just about ready to give it up. But guess what? It hasn't given it up yet. And what we will get, I believe we get, let's see, I think Regeneron comes out with numbers tomorrow. That's trading at 549. Yeah, that comes out before the market tomorrow. And inside the IBB, I believe most of these are already out, meaning the waiting, yeah. So Regeneron would be the highest weighting structure right now that hasn't come out yet. That's 7.3% of the IBB. Celgene already come out, Amgen already come out, Gilead already come out, Biogen come out. So, you know, we'll see where this IBB wants to go. But until the IBB basically cracks, you'll see that NASDAQ just kind of hang up there. And the NASDAQ, no doubt, it's down. The composite's down $7 today, but you know, it is under the lower range, but this is actually it's a slow roll. And, you know, we'll see if, in fact, you can get some juice in this roll. Right now, you have light volume in the SPYs right now, the SPYs. We're only, we have light volume in the NASDAQ composite. Let's see. Yeah, it's still light. It's 6.3 million. And what tends to happen, folks, is at the very beginning of the market, at the end of the market, of course, you get more. It doesn't mean that you won't have an expansion as we get to lower price. If we go intraday and we take a look at this, yes, the E-minis intraday right now, they're going, so we've just gone from 102 to 91. It broke the 93 from Thursday. Well, you know, yeah, it's going to get intriguing. Okay, so this is what you're doing out here with these E-minis. You had the slow roll. What we just did literally 5 minutes ago is get into the 89 area, which was testing the July 30th swing low. You break that baby, and we're actually, the longer that you stay under the, that's 89. Is it? Yeah, the longer you stay under the 89, which we hit 89.50, the more probability that if we take that, okay, so take 89 and conservatively take 105, so it's $15. That says you can get right back down to the 89, 79, 75. That's how that's set up right now. So I'm going to bring this a little bit closer in. So close in, what we did is that we hit down there. We're going to need more volume as we hit that baby. We've had 38,000 contracts. That was going into 46,000. So it is going to need more juice on the way down. It will try it again, too, by the way. What ends up happening is that the first leg down, you know, you get some good juice, which we got. It'll come back down here again. Your confirmation on that was, as we do a little bounce here, does a bounce with lighter volume. We go into the NQs. We take a look at the NQs, and the NQs are stronger than the S&Ps right now. What we have with the NQs, they got down into the price point of 68, and this does have some juice on the way down. When we hit that 68, it had some juice. That was going into the lows of last night with higher volume. We take this. Yeah, see, this is interesting. So the NQs actually have more information that they actually want to get to lower price. But yet, as we had come down this morning, they had less juice coming into that swing point. But on a basis of where it wants to go, you have a high volume swing low at 44.97, which is, you know, that's the low that was established on the 28th. You have another one, the low that was established on the 30th. Those are good setups, folks. You get the setups like that are consistent on the way down versus on the way up. That's where that baby is going to migrate to, and that's where you're going to go down. And when you have that, by the way, okay, when they break very quickly because there's nothing in the middle of them. There's nothing in the middle of them. Operators are looking at those lower levels and they're saying, hey, guess what? You know, it wants to test that lower level. Let's see if we have anything down at that lower level that will hold it, or in fact, is it going to basically take it out in spades? Inside the commodity market, even with the dollar down, commodities are still getting hit out here. You have gasoline down 3.6%, crude's off 1.8%. You got diesel off 1.7%, wheat's off 1%. The orange juice market, that's up 3%. Natural gas is up 0.2%, and cattle is up 1.2%. That's about it in the marketplace. We go take a look at that copper market. Let's go take a look at copper. So copper's trading at 235. Yeah, I like the setup. Here, watch this. They're yapping all morning long that copper is in a bear market this morning. When you take a look at this contract, however, this is what you have. And copper's got killed, there's no doubt about that. But what you have, the last time copper had any volume was down at 238. That was on the 7th and 8th of July. Big volume. Gets into lower price. This morning, thus far, it's actually rejected the 233.75. We hit 232.15, and you know, we'll see where this baby shakes out. If in fact this is going to be the rejection at that level. Dow right now is down 98. You get the Nasdaq off 9. S&Ps are off 7.5. Rengo Resources. We go take a look at a few of these gold stocks. GOLD. She's backing down with lighter volume. Still no buyers. Still no buyers in that market. We go to Gold Corp. We take a look at Gold Corp. Same setup. Sideways move. Anico Eagle AEM. Hitting the lows. Much lighter volume, you know, but bottom line is that, In order for higher price, what do you need? You need wide price spread, accelerated volume inside this marketplace. We go back over to the dollar, and the dollar still wants lower price, folks, okay? This is just wild, man, watching this dollar shake out. This morning, I couldn't even get to the highs that were generated out there on Friday. The highs on Friday were the 97.80 level. This morning, just couldn't handle it. Could not handle it. Let's go to Honeywell. Let's go take a look at what Honeywell's doing. HON. Large consolidation still hasn't broke down. A lot of these equities are basically set up like this. Honeywell going all the way back to January. Same price point. Slow slide going sideways, and that's about it. What has happened in the UK, in China, in Europe, the UK has just given it up on price. UK had got to, the FTSE 100 had got to this 67.10. You're at 66.78. The DAX in Germany had got up to 248. You're 11,000 rather, 460. You're at 409 right now. And what is unusual is that, you had Europe up a bit here this morning, but our markets just refused to get into higher price. So we'll see where this shakes out as we move through the trading day. But thus far, bottom line, you're talking about lower price. Now, as you come over to our website at TFNN, folks, you're going to see right on the front page, I'm going to be doing a workshop. And this workshop is going to be August 12th. What the workshop is set up on is 6 trades for September. Now, what's really cool, no doubt, which I like, is that we get a pullback coming in many of these equities. What you're going to get there is you're going to get 2 longs, 2 shorts, and 2 option trades. This is going to be for subscribers of my daily newsletter, Market Insights. You can come over, test drive the newsletter for a month. As you test drive the newsletter, you're going to get my book, The Art of Time in the Trade, your Ultimate Trading Mastery System. You're going to get into the den, and you're going to get the workshop. Check it out on the front page of TFNN. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back. Dow, down 84. NASDAQ off 5. S&Ps are off 5.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 89. You get the NASDAQ off 6. S&Ps are down 8. And don't forget, folks, right here at TFNN, 8 o'clock in the morning to 6 in the evening. You can get all that programming right on your cell phone, TFNN.mobi. Well, man, Mr. Basil Chapman's going to be coming up next, growling with your Steve Rhodes, Dave White, and then, of course, I'll be back this afternoon. On Tuesdays and Thursdays, we got Andy Hecht. From the 6 to 7, 5 to 6 rather. What we do have out here, and this continues, folks, okay? I suspect what you're going to see inside the NASDAQ is that the NASDAQ, when this thing takes a hit, it's going to be a vicious hit, and this is why. Even today, what you have is that the NASDAQ continues to have volume as we roll. The S&Ps out here today look to me like, we get light volume. Well, we do have light volume at this point. The NASDAQ, however, has already done 470 million shares. That is an equivalent of you're going to do a couple billion shares in the NASDAQ. That is a big number. Well, it's a large number in the summer on a Monday or a Friday. That's how that baby shakes out. Inside the S&Ps, what you have with the S&Ps, that's going to be a light number. On Friday, we did 978 million. S&Ps will maybe come in with 750 million. What we do have is that if you do look, and I bring this up for you, this is when you look at the whole market, meaning the New York Composite, you get a whole different situation as to where we are. The Composite is trading where we were in June of 2014. Well, that's not bad, actually. No, that's a year ago. That's a different ballgame. The highs of the lows of 2014 is 10,362. Now, when we went down 4 weeks ago, we got to 622, and that would be 300 points away from that level. The New York Composite is showing, number one, that it wants to get there, but number two, this is subtle, is that we had an expansion last month, because it's always so cool when you can do the monthly charts on this. So we did 4.2 billion shares as we got to 10,636 versus the last time we were down there at 3.7. So you can see what happens. 4.2 versus 3.7. What it's trying to go after is where we had 4.8 billion shares. So that is just another sweet little piece of information that the turn that's happening, slow turn, no doubt about that, frustrating, bulls, bears, all of the above. We'll see where this shakes out in the next quarter. But what I suspect you're going to get out of here today is that you have the end of the month, the beginning of the month window dressing. They can't get it going window dressing. That's what the way it was set up right now. You have the amount of earnings that have come out are substantial. It's not like there's a lot of numbers that are going to be coming out in the next couple of weeks. You have oil that continues to moving lower, which has taken those oil equities down in a large way. You have the small caps. Actually, let's go over and take a look at these small caps, because what we do have with the small caps also haven't been able to make the high that was generated out here in July. So when we put the small caps also on a longer-term basis, bottom line, they would have to get back inside the 120.58 area if you look at the IWM. So that hasn't gotten back inside there yet. We'll see whether, if in fact it does. But bottom line, you put some of those together, this market wants lower price. You stay right there, folks. I'm Mr. Basil Chapman's going to be coming up next, growling and prowling with you. The Dow right now is down 74. Nasdaq's off 4. S&Ps are off 3.5. Look forward to speaking this afternoon, folks. Have a great one. Have a safe one. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.